Hey, it's Mark. I'll first talk about the trades I made today. I put some undersized positions on mostly all these puts. Like this cons, it hasn't really even rallied with the market, and it's just kind of still in this downtrend. It's been going on for a while now, and it looks like it's gonna do another triangle. Like, see, the last time it just kind of did this consolidation triangle thing there, and then like a pennant, and then it looks like it started another pennant little triangle here. So it it failed at that trend level again, this down channel level. So it hit that again. So if it plays out right, it's gonna go lower. It may not even break down for like a week, but it's gonna definitely like consolidate here some more, it looks like, and then I think it's gonna keep going lower. So I put that trade on with puts. I think it was pretty far out. It's, some puts on those. I think it was the December's ones I put on, and I added some more BLNK puts too. Like the setup came now with the for the short because the momentum stalled out, so because it went red, and it's kind of like a doji too. So that looks like the little mini squeeze is over. So the setup is, that it's going to go lower. So let's look at it with the Bollinger Bands too, because yeah, that's a good one because it printed that it printed that red candle above the upper Bollinger Band, which is like the sort of the supreme indicator for like a oversold, overbought little supernova thing. So it's not really supernova, but it's like I think it's like a mini squeeze. So I see that one coming back. So I put on a bunch more puts on this one. The right now I've got the January. No, I've got yeah, January $2 strikes. The see, I'm trying to see these numbers here, and I've got the December 1st 350 puts, which is kind of the ones for this little setup here that it comes down. And I've got some November or some that expire this week too. And it looks like those are definitely not going to work out because we had that little rally. So the other things I added some rig, and I still have some EVgo puts too. The January, I got January $2 strike EVgo puts, and that one hasn't really rallied with the other ones as much. My data feed's really weird here, but that one's not really as much of a little mini squeeze as as the other one, the BLNK. But and the other one I added was the rig. But yeah, the Lazar. I finally put the Lazar puts on too. Like I really like that this setup, like back here, and it's breaking down again. Like it just had a new closed at a new 52-week low again. So that one is just acting really well for shorts. So I put some puts on like undersized on that with a $2 strike like in January. So it's plenty of time for it to get down. And it really looks like the most of the reaction came after earnings too. It never really rallied after earnings. And like the other ones, the relative strength has been really weak. It hasn't participated with the market, which is kind of where I'm hunting for these these short opportunities where stuff just not reacting with the market. You know, like the other thing was the oil. So I noticed the oil wasn't rallying with the market either. So I put that I did a tweet on that, or a tweet or a post, on Twitter, on X yesterday, and let's go ahead and look at oil. Like we can recap what I was looking at there. So like the other day, like back here, I was like, it looks like it's gonna test that resistance, upper resistance channel there. So it hit there. It actually kind of went above my line, but it closed, right back on channel resistance. So I'll make this a little bigger because I got some lines there. So it basically closed back at it, and then it did this. It's kind of like a little channel flag there, and broke through. And then I really wish I found it. I put it on like a day earlier, but I caught most of the move today with the rig. And had I put it on earlier, I would have done the USO puts too. But the rig's acting really well, and maybe be a better setup for the alpha I can get from it, because rig can get really volatile. So now I think it's still got a ways to go till it gets down to this channel support. You can see it'd probably be like 71 or so, 70. So it's pretty. I see 70 is pretty on the table here. Looks like there's not really any support too. So we're in downtrend mode still. So that's a pretty good candle today too. It tends to not really. It hasn't been trending, day after day a lot. So maybe this next push will be the last one before it catches support. But we'll see. Like the momentum is just really strong on the short side here. So the rig I noticed the pattern was even better. And rig it can really just keep going in one direction once it gets momentum, like back on these pops back here, like in July. It it just goes and goes, and then it's been acting really well. In October it was down, consistently. So I'm looking for some more of that, consistent downtrend when it broke this little triangle there. Because it's turned into like a triangle, and it just broke through it. So I put on the puts like at open, so I got a good fill. So those are up like 100%. At least they were probably a little more than that now, like 110. So that's still a good one. Like I think this is gonna have some more days, like a lot more days maybe, of downtrend. So that was kind of the most obvious thing I saw was the USO, or the oil breaking down. And I'll probably wish I had more size in this one, because this is a really good setup. And it's still a really good setup on this rig, because it's been really sold off. There's been a lot of selling pressure the past couple months. Looks like there's not really a major level till you get to like mid fives. Looks like about 550 so area. So those are probably my best ones I've got on now. And I went through the supernova scans and I found a couple things. This HLP, it's another China one, and it went from one something to $5 already in like a month, and it looks like exhausted here. I'll be surprised if it opens up, if it gaps down actually. But this one's pretty obvious supernova, and there's not much history here, but that's a good one. And the MYO had a red day too. That's like a first red day probably. These things can keep going though, so but it looks like that may be the top for now, but it really needs to break down before it's another short, like take out like 260s. And this other one that's kind of a supernova that I've been watching, this DRCT. It's like it went from like 260 to 580, but that was off our earnings. But it's still the pattern, so there may be one good red day. Looks like it might be tomorrow. So that's like a lesser perfect short setup supernova. But yeah, if you look at it actually has a history of these spikes and fades. Like back in 2022, did that. Actually did a lot of them after earnings too. So yeah, I mean, there's a lot of resistance there about $6, around 590. Let's see what. Yeah, $6 is a really good level. So I think it may not even be able to make it there. But that's like a short bias one too for a trade. And the semis finished pretty well today. Looks like the semiconductor industry is still doing well. Like I saw a news blurb that OpenAI is probably even using AMD's chips now. So I imagine the race is on for these companies to get chips that they can compete with NVIDIA, and there's a lot of alternatives to NVIDIA now. So those are the main things I want to talk about. I went through the gap down scan. There's a bunch of them. Like this, I found one energy one. This Noble looks pretty good, but I've never traded it before. But it's basically on the 52-week low again. Or actually, it's not. Yeah, it's had a pretty good run this year. But that one just got really weak with oil too, and it hit the gap down scan. So that's probably the only one I'd be interested in on the gap down scan from what I saw. I'm just kind of looking through them again here. I just don't see anything great. There's one here, this MD is kind of interesting. That one had another breakdown. Yeah, look at that, it's on volume too. I don't know that company though, but that's a potential one. And the Adobe's still holding in there too. So that's about all I want to talk about. Yeah, I guess we can look at the indices real quick. We'll just see. Yeah, what I saw is this. This looks like the new channel support for the IWM. This level, that level there. And it's really, it may come back to this, like 170 area here because there's a big level there. So to me, it looks like a flag. Because a lot of times bull flags have these shooting stars at the top. So to me, the momentum's still there. Even though that was a pretty good reject that yesterday. So I'm looking forward to come back to that level there. So maybe a couple more days, or actually it could be a week. That's what it looks like it wants to do. It's gonna trend back. Like see how it did there. It kind of did a bull flag before that last push. So I wouldn't be surprised, if it's down, all next week. And KRE is kind of the same story, but it's actually held above that level still. So I mean, this potentially could just hold and like break out again. But I wouldn't be surprised if this one pulls back too, because it's got that channel supports all the way down there. It'll be about 42s. So nothing really major happened today really with those. And let's look at the S&P. I've been looking at some country specific ETFs too, and seen those markets. And a lot of them have a good rally too. Yeah, S&P looks pretty good too. I mean, that we actually held in there today, and the momentum may just keep going. Like I wouldn't be surprised if we just keep breaking out. Like Vietnam's kind of been one of the best growth countries, and they came back above some major levels there too, and some of these Middle Eastern countries were they had really good relative strength for a while the our U.S. markets were going down. Like even the UAE's up a lot. Had a really strong rally off the lows. And I was looking at their emerging market ETF, and I actually bought some. I bought some like really undersized calls in this one, like 42 strike, like a month out or so. just on the possibility this momentum just keeps going. Like you can see, it can move pretty quick. Like back in January, it moved a lot fast because it's just a really strong uptrend momentum, and there's kind of some levels. So I'm really surprised, this thing's gonna. I think it's gonna test another level up there. But that was kind of like a pair with the oil, just to get some beta, some long market exposure. So I mean, let's look. I was looking at the China too. Yeah, it hasn't really rallied as much. Like it's pretty weak. Yeah, wow. Yeah, China just hasn't even participated. Yeah, that could be pretty telling. The stuff that didn't have any relative strength with the market, hasn't a lot of things I've noticed have been doing pretty bad. Well, mostly just I saw that with oil. So I'm just looking through my other gap down scan here through yeah, so I think the thing to watch is oil. Like oil can be a leading indicator with the demand side, because when the economy slows down, if it slows down soon, I think you'll most likely see it the most easily with oil price, because there's just a lot less factors and things involved. It's for the most part it can be it's very demand supply driven in the short term. So equity markets can be pretty complex. So like once the demand drops, the price of oil is going to go down. And I mean, you already saw OPEC made some cuts. Like it was like a couple months ago. They made some serious cuts, and I think they're pretty smart. They're gonna watch it really. They're gonna watch their the supply really closely. So I think that's kind of more of an indicator on the economy now than, or more of a leading indicator, I'd say, than like even the economic data coming out. Because there's always lags with that. But the price of oil, it's more current, and there's less. It's not it's not old data. Like when we look at these CPI reports and stuff, and it's all at least weeks, months old. So there's always revisions and stuff. But the oil market, it's very demand driven, and to me, yeah, it looks like it doesn't look too good, from the price perspective. To me, it looks like it's going to come up on these lows again. These like 66 a barrel, 65 maybe. So that's just something I'm gonna be watching, the next few months when, as inflation slows down and we possibly, flirt with deflation. But that'll be if there is deflation, I think it'll show up in the oil price before anything else, even the data. And I was trying to remember, like, 'cause I remember back in the last like major recession was like, like 2007, 2008, and I was looking. I drew this trend line up back in 2008 because oil spiked huge in 2008, and it broke trend in July. So July was kind of the beginning, middle of July was when the weakness showed up in oil. I was just gonna compare that to like everything else. So the looks like the indices actually, yeah, the indices topped way before that. So but when was the major top there? Yeah, it looks like, yeah, oil took longer that time. Uh, yeah, I just think that's something to look at is, when the economic data is always lagging, you want to watch the markets. Like it may even show up in the equity markets too before the data. Like a lot of times the bond market leads to, but the bond market's doing pretty well, and the dry bulk shippers used to be a good leading indicator too, but it's been kind of off and on, like as far as a signal. I mean, it's been a lot of times, like a long time ago, it was a really good signal for economic turn, for economic slowdown, or spike up. But the past like 10 years, so not so much. I'm not sure what. I think I can see the Baltic Dry Index with this, but I mean, it's not really. I wouldn't say it's like going to be super reliable. But I'll just keep a watch on that oil level and see. To me, just like there's got to be some oil price strength for the market, for the economy to stay strong. So yeah, Bitcoin, everybody, that kind of like faded out, and it's just so messy. It's just consolidating. I don't know what it's gonna do, but those are the things I've been focusing on, and I'll call it a wrap there.